SpaceX has now been selling off for 7 straight weeks, but the charts are starting to show the first signs that a relief rally could be developing. The question is, are the bulls finally taking control, or is this just another dead cat bounce before we head back towards a $100 level? Today we're going to break down every major time frame and identify the exact levels that could determine SpaceX's next big move. And before we go over the top-down analysis, I want to go over this winning trade I gave you guys on the last SpaceX episode, which was on the daily chart, and I gave you guys a possible bear flag here since we were going sideways, and the measure move to this was taking us down to about $100 or so. We didn't make it there, but we got as low as $104.83, so this is a winning trade. So congratulations on whoever took this setup. This is a big win for the flex candle community. Now we're gonna start off here with the weekly chart. Right now the price of SpaceX is at $110.13, and we've pretty much have been falling down for the past 7 weeks here. This is looking very bearish. Now there's not much to chart here just because this is a brand new stock that pretty much came out on June 8th of this year, but we could take a look here at the VRVP, and this is going to give us some clues. We're currently here all the way on the bottom, and as you can see there's some gaps here in the VRVP, so this means if we could get above this level, there's a gap here, we could make it up to the next level. That's at 115, 116, around there. If we could hold this level as support, then the next level that we could hit is above this gap, which is pretty much at 123. Then, you know, there could be some movement here between 123 and 130. Eventually there's a gap that could bring us back up to 133, then 140, and then this final gap could bring us up here back to 152, and eventually we want to make it back to this red line. This is the point of control. This is where there's the meatiest part of the VRVP. This is pretty much at 158. This is where I think we have to get back above and hold this as support in order to get bullish again, and then so on and so on. We could keep on trying to get back up, but if we stay underneath this point of control, I still think that this could just be a relief rally if we do make a move up, and then eventually we start rolling over again. Now if we head over to the daily chart, we already went over the bear flag that played out, and right now the stochastics are low. It's looking like we're starting to point up a little bit. The RSI is below the 50, but we're also dragging here on the bottom, and it looks like we're also pointing up, and we're below the 21 moving average, which is currently at $127.91. If the stochastics and the RSI start moving up, it's possible that we're going to go and at least test this 21 moving average. Now if we could break above it, like I said, that's how we could make it back up to 158. If we get rejected from here, then I do see us coming back down to possibly test $100. We head over to the 4-hour time frame. When we were back here, I was hoping that this would have been a possible falling wedge, and this could have broken us out above $200, but we failed. We got rejected off of the 21 moving average after we got a slight breakout, and then ever since then we've been suppressed underneath the 21 moving average. You can see here that the stochastics RSI were on the way down, but we're starting to get a curve back up, so we're going to go back and test this 21 moving average. If we could break above this, then we could go and test this 50 moving average at 133. If we could hold above this, once we break it, then we could go and test that point of control pretty much at 158. So these are pretty much the 3 levels that we need to break in order to get bullish again. If we get rejected at the 21 moving average, again, look for a move towards $100 or less. Now on the 1-hour time frame, we see here that the stochastics are toppy. I'm not liking this. We were rejected off of the 15 to 21 moving average. This would suggest to me that we possibly are going to have more downside here. If we can break above it, we have to get above the 80 moving average, the 100. We could get back above the 100 moving average on 119. You guys see here the gap in the VRVP. We can make it back to 125. Eventually, if we want to get bullish, we have to break 137, which is the 200 moving average on the 1-hour time frame. Now on the 15-minute time frame, this is probably the most bullish chart. We do have some bearish divergence here, and the RSI is rolling over. We're below the 50. The stochastics are also looking like we're rolling over, but this is kind of showing that maybe eventually we could start making a move back up. We did get rejected off the 21 moving average. Let's see if we could hold above this 50 moving average at $109.75. If so, maybe we could start making a move back to the 200 moving average at 112. A theory that I have, if we're bullish, is that this is a possible cup and handle play. So this is the cup, this is the possible handle, and the measure move to this could pretty much break us above the 200 moving average and take us back up to about $115. We're getting very close here. The 50 moving average breaks, we have to hold the bottom of this cup and handle. If we lose this, then again, I do see more downside, possibly testing $100. The only thing that I'm thinking is that since the stochastics are low enough here, maybe we round back up eventually and come back up. But if we lose this level pretty much at 108 and start closing below that, then I think $100 level will possibly be next. All right, guys, so that's the breakdown. If this gave you clarity, clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.